Good evening. Tonight, red is the new black for Netflix. The streaming wars are hitting the company hard. Millions of viewers and billions in production budgets simply weren't enough to delay the inevitable. A brutal earnings season report that sent the shares down sharply. It's on track for its worst day in 3 years. Now, there's no shortage of must-watch Netflix stories. So, we're off there. Let's see exactly which ones to browse. Who's watching and what? Investors are cringing their way through a horror movie when it comes to the competitors. Now, they're pulling the shows. The competitors are pulling their shows, like Friends and The Office, because, of course, they're stockpiling their content for their own apps, like HBO Max and Disney+. Netflix executives, meanwhile, well, they are now starting to really watch the production costs, spending some 15 billion this year on original content. And as for the customers, they're seeing prices rise. And in doing so, they are walking away. Netflix lost more than 100,000 subscribers in the United States in the last quarter. And perhaps worse than that, came up millions short internationally. If that keeps happening, then Netflix will look like this. Frank Pallotta is in New York, joins me now. Frank, you have said on numerous occasions, particularly on Express, look, keep the 100,000 in perspective. They've still got 100 and something million people. But the reality is, it is a case of what have you done for me lately? And the numbers are not good.
No, the numbers are really, really terrible. And the stock shows that today. It's been down around 10, 11%. It's just a really bad day for Netflix. Probably one of their worst days in a long time. But people, what they're really trying to figure out is this a blip? Is this an anomaly? Or is this the end of the booming era of Netflix? I really don't know. Both have arguments. You could just say, well, you know, they lost. They raised prices about 20%, and they didn't really lose anybody. They still went up 2.7 million overall. I mean, they lost about 130,000, but that was basically flat in the United States. But name another company that can raise its prices around 20% and not really lose consumers. On the other side of that, though, you have a bunch of competitors like Disney, Apple, and CNN's parent company, Warner Media, at the gates. These are not small streaming service companies. These are the biggest these are the biggest companies in media and tech. So it's concerning.
Frank, yes. Those streaming services are not here yet.
True.
In any capacity. Disney or HBO Max, part of our parent company. So why would we be seeing this weakness in their future subscriber numbers? I'm guessing what we really have to work out is this an aberration?
I mean, the other question we have to ask is, has it hit a ceiling in the United States? Is there going to be any more growth in the U.S., or is Netflix's growth going to be all global going out? That is going to be the major conflict for Netflix over the next year, even more so than all of these new competitors, is its growth around the world, because it seems like the U.S. is tapped out.
Okay, so I mean, I think when I got my subscription to Netflix, I think at that point you could probably have said, yes, it was tapped out, because I must have been the last person in America to actually finally pay that money. But they've had 2 price rises almost in as many years. And it was only a couple of dollars here or there. That's true that's fair. But they can't keep doing that, can they?
That's the other major thing here, is that if I'm an investor and I'm looking at this, I'm very, very concerned about how much more can Netflix raise its prices, because everything goes up in price eventually. So it looks like right now that they raised their price about 20%, and people kind of freaked out. It didn't really go up the way they were supposed to. It's literally half of what they were expecting. So what's the growth here? If, say, you know, if they keep bringing in this content and keep growing and they keep spending this amount of money on content, how much more can they charge consumers without consumers bailing out?